believe we're live now.
Sure. Welcome to today's podcast. My name is Mwale Tochi. Of course, we're streaming live from the Studio Hub. So on today's meeting and interview, I have myself as the host, and of course, my co-host, Mr. Michael. Of course, by my left is Mary. And our guest today is Mr. Andrew Chung. Mr. Andrew Chung is a consultant with the MPP Residential, a UK property manager. MPP Residential is one of the best experts who have done and made millions, if not thousands and hundreds of people, millionaire and billionaire in real estate in the UK. I've had the privilege of meeting Mr. Andrew Chung. He took me to some of their real estate apartments, luxury apartments, from Manchester to the Manchester United Club. Most of them are proximity to Manchester United Club, and then Man U, and then some other surrounding clubs. And then today we'll be having the privilege. I want to thank you for the opportunity to stream live to all our audience in Africa, Nigeria, and around the world. So today, please sit, relax, and then write things down. And of course, if you have any question that you want to ask, please, the chat button is open. We will respond to it, and then we're also going to give you the opportunity to address it. And then we have a few questions from London to Liverpool, Liverpool to Birmingham, and then properties, investment opportunities, and success. How rich are getting richer, and the poor is getting poorer. The secret today will be unveiled. If you want to start with us, if you've been thinking on how to invest in real estate, make finance, your cash flow industry, multi-billion pounds real estate. Mr. Andre will be addressing whether you are a resident in the UK, whether you are living the non-resident. The episode 1 today, Mr. Andre is going to be unlocking and revealing how you can invest, whether you're living in the UK or you're living outside the UK, the gems, and then expert insights that will help smart investors to build wealth, and then impact to the society. So don't miss this chance. Take action after this. So the first question is today, Mr. Andre. I hope you are ready for us, and then the audience who are listening right now. Okay, fantastic. So we want to start first. Could you briefly introduce yourself and your experience in the UK property market?
I'm Andrew. I'm senior investment consultant at MPP Residential here in Manchester. And thank you for having me on the podcast. So I've been working with investments since I graduated in 2012. Started in London for 2 years doing Forex related investment products, and then moved to Hong Kong in 2014, and I've been there since 2023. Again, working with in high net worth individuals, doing equities, doing bonds, again Forex, and managing their portfolios for them so that they grow their wealth and continue to preserve and grow depending on what their goals were, what their circumstances are, and I would be tailoring products and plans and portfolios for them just to reach their goals. Being in the UK since 2023 now, basically 660 square foot 3-bedroom apartment in Hong Kong wasn't enough for a family of 4. So decided to come back for, I think, the better lifestyle. And the UK property market was, during my last 10 years, was something that a lot of my clients from all over the world were also looking at in their portfolios, and very wary of what's going on in the UK. And I think this was just a natural transition for me to come into the UK property market when I came back.
Fantastic. That was a very good background. And of course, like I said on my opening remark, I've had the privilege of meeting you one-on-one, and rode on your very nice car to your office. And then I saw your manager and all your team, wonderful people. And I can't forget how warmly I was received. And we're ready to really explore. And then later, our investors all around the world, customers and clients, to be able to take a step today. Yeah. So, what makes the UK real estate market unique compared to other countries?
I think if you compare the UK investment market to, even like the US, Dubai, Middle East, etc., the legal framework in the UK is probably one of the strongest in the world in terms of security, as well as political stability, economic stability. We might not be seeing the double-digit growth of China, but then with double-digit growth, you can see where they are now in terms of their property market because of the exponential growth they've had. We do grow as a country economically, but we grow at a nice steady rate where we can sustain this growth over the long term. No, the legal framework here, the UK has been an established country, developed country for many, many years, and the legal frameworks for that has established with them. If you compare it to the likes of other countries like Dubai, Middle East, they might have some sort of legal framework, but it's not as established as, say, the UK economy. No, with the UK as well, because of our safety regulations, our building regulations, I think the quality of product in the UK property market is a lot higher than most other countries around the world.
Fantastic. For those investors all around the world, whether you are in the UK or you're outside the UK, stability of your funds, investment is very important. In the UK, like you hear from the experts, Mr. Andre, is paramount. Security of your funds, return on the investment is what makes it different from all other countries in the world. So, of course, I'm going to go to my co-host, Mary, will take the next question. Please, if you're watching, wherever you're watching, please do not forget to hit the button, like, share, comment. Then, of course, you can drop your questions. We'll have the opportunity of Mr. Andre to answer your questions. Over to you, Mary.
Okay, hello, Mr. Andrew. My name is Mary. I'm the real estate executive for TD Women Real Estate Limited. Thank you for having me.
Yep.
So our next question on the list is, what are some of the most promising regions or sectors of the UK market that are undervalued but set for growth?
So if we're looking at why the UK market now, so I'm going to see if I can share this screen because it's very, very. Actually, let me just try and share the screen now. Share screen. Okay. Share. So I'm sharing this data by Savills, which they've updated their numbers in terms of growth. So why now and why the UK market? We are seeing consistent growth in capital appreciation, especially in the Northwest where we're based. The UK average over the next 5 years, So up to 2029, up to the end of 2029, we're looking at 24.5%. And that would be the UK average. But if we're looking at investment, like my investment career is trying to beat the market average. And that's where investors are going to make the most wealth, the most stable income, and they're going to see the biggest difference in their lives, so changing their lives. The Northwest, so Savills, I'm not sure if anyone knows, but they are one of the top 4 real estate companies in the world. They have a massive research department where they're looking at property data from all over the world. And if we're looking at the last year's report for the Northwest, they were looking at about a 29.6% growth up to 2029 from 2025. However, they have revised that to 31.2% recently. And as you can see, the Northwest here, we've been seeing a smallish growth in 2025, and then you're going to see strong growth up to 2029. And I believe they're taking into account of the amount of institutional money coming into Manchester in general. We're seeing growth. No, so out of the top of my head, when we're looking at billions of pounds being invested, I can think of 12 billion pounds of regeneration money coming into Manchester over the next 10 years.
Wow.
Whereas other regions in Manchester or other regions in the northeast, for instance, property is relatively cheap, but you're not going to see a strong capital growth. You're only going to see a 26.4% growth over the next 5 years. Midlands, West Midlands, so Birmingham, etc., 27.6%. Where you're going to see the most growth is the Northwest over the next 5 years.
Wonderful. So if you're an investor, no pressure. So you just calculate the figures. I mean, from 32 to 20-something% return on investment from the Northwest, which has the highest potential return on investment based on this analysis. Of course, you're not under pressure. You put the money where it will work for you. So why not just take the step right now? You're in a safe hand. It's Andre. You've learned from his background the analysis of the potential real estate investment in the UK. And of course, the next question will be from Mr. Michael. Over to you, Mr. Michael.
All right. Thank you very much, Mr. Andrew Chung.
Yeah.
And my question goes thus. Why is now a particularly good time for both resident and non-resident to invest in the UK property?
So I didn't quite catch that. I think that was lagged. So your question is timing the market, or?
Yeah, why would somebody take the decision now?
Yes. Why did that person have to take the decision now?
Yes.
For both resident and non-resident to invest in the UK property?
Definitely now is the right time. As you can see on this graph by Savills, again, I'm going to point to them again. No, 2025 growth, you're not going to see much price change. You're seeing a 2.5% or even 0% in London growth in 2025. But if you look at 2026, if you're going to wait until 2026, you're going to pay 5% more in the property price than today. And I think if you have the funds now, and I say this to all my investors over the past 13 years, it's much more beneficial to stay in the market, the property market specifically, as long as possible. And the sooner you could get into the property market and stay in there over the long term, the more beneficial it's going to be in terms of rental yields. The longer you're in the market, the rental yields grow because rental growth in the UK is strong and steady. The longer that you're in the market, you're going to see more capital growth. And this is only for 5 years, 31%. Imagine having a let's say £200,000 property, like you buy right now, let's say it's a 1-bedroom. In 2030, by the end of 2029, 2030, that property is going to be worth £260,000. You've made £60,000 by buying now rather than in the future. If you bought in the future, you're only going to see less than that because you're paying probably 220 in 2026, 230 in 2027. And waiting is just going to increase your cost of acquisition.
Okay, so to buttress that, let me ask one more question. And what are the factors are you seeing that might actually influence the increment in 2030, 2029 by 5%, as you've said?
Yeah. So let's take the West Midlands and let's take Manchester. They're both very, very similar. So there's a lot of projects completing in 2027. I'm talking about infrastructure projects. I'm talking about big projects that are, for instance, for Manchester, the biggest spa and sauna, indoor pools resort in Europe will be finished in 2028 in Manchester, right by Trafford, right? And they're accounting for that growth because that's going to bring a lot more. Once that completes, that's going to bring higher rentals, more jobs. All these data is accounting for the population growth in Manchester, is accounting for the completion of regeneration projects going on around Manchester or the Northwest. And then, for instance, in the West Midlands, the 6%, that's accounting for the HS2, the biggest railway transport infrastructure investment in the history of the whole of the UK. So I think the drive is the investment, the amount of investment going on in all these regions in the UK, the general economic growth of the UK forecast as well as there's also the factor where there's an undersupply of property going on at the moment, and builders aren't building them quick enough. So, for instance, by 2035, the city centre population for Manchester would be around 200,000 people. But the current population for Manchester city centre, I'm talking about city centre, we're looking at about 90,000 to 100,000 people. And in 10 years to build enough property for 100,000 people, what's the likelihood of that happening realistically? And I think that's why we're seeing an undersupply, but a growing demand. And that is helping with capital appreciation as well as rental yields.
Okay. This is a very good background and a very nice response for our audience who are listening right now. This regeneration in Manchester, are they happening in all regions in the UK, or just particularly in Manchester?
So there are other regions. So I know I have a few developments that I want to share with you, so that you understand that actually there's an investment case for a lot of regions. So we are privileged as a company. We have access to developments all over the UK, London, Manchester, Liverpool, Birmingham, and other locations, other commuter locations within those city centres, etc. So we have a lot of access. And there's one I'm going to show you in Birmingham, why that would be the best development in Birmingham to invest in, as well as the one in Manchester right now in terms of One Trafford Edge, being right next to the Spa, and as opportunities to maximize cash flow from those investment opportunities.
Yeah, please go ahead and share, because that's going to be our next question. So.
Yeah, so let me share. Let's start from Manchester. We've been discussing Manchester, so I'll start from sharing Manchester first. Let me see. So we have one in Manchester, which is, let me just load it. One Trafford Edge. This is our latest launch in the Trafford area. And I would say that this is the best development to come across my desk in the last 5 years. And that's talking a lot. 122 apartments, luxury. As you can see, of course, I'll be able to send this across to anyone who's interested just to have a further look. But you can see this is the kind of developments and the kind of living that residents in the UK want to live in. But then we've also got a thriving Manchester community. There's a lot of jobs going on. But then we've got the regeneration, this Trafford City regeneration, which is £4.2 billion. And imagine what would happen to property prices if an area that has got nothing there, or it's already established, and you've got 4.2 billion.
Sharing? 1 second. Are you sharing now?
Yep, I'm sharing now.
Okay. We just 1 second, so the audience can see the property.
Yeah.
They can put the slide into the streaming platform. Okay. Thank you.
Definitely. So, One Trafford Edge. This is the external. This is the brochure for it. You are looking at a very, very well priced. I believe I've shared with Nali how much these were compared to other developments in Manchester for a luxury level of living. So, one bedrooms, you're talking about £200,000. For a similar one in the city centre, you're looking about £300,000 to £350,000. So, by being in this location, you're already saving £150,000 on the property price, which will lower your acquisition costs. And we'll talk about financials later on, but being part of a regeneration plan, we love regeneration plans because they provide strong capital appreciation that normally beats the market average. They provide strong rentals, especially with the spa, etc. So this is what they're planning for the spa. And, you're attracting about 2 million visitors per year with such an attraction. And that's why they are investing £450 million to build the spa. And it's an investment, and they already worked out that there'll be a return on that investment. Otherwise, they wouldn't go to build this massive facility, massive attraction in Manchester, not to make money, basically. So this is one of them. This is what a typical 1-bedroom floor plan in this development would look like. Typical 2-bedroom floor plan, how that would look like. And in terms of style and comfort, these are flexible layouts. These are what they will be finished into. They don't come with furnishings, but this is an idea of how it would look furnished. Really nice, really luxury, hotel style. And with this one, you can do short-term lets, Airbnb in this one to utilize the Fern Spa. You're a 7-minute walk to Fern Spa. You're a 15-minute drive from Manchester Airport. So all the people looking to go to the spa when it opens, etc. All the 2 million people, most of them will be flying in from all over the world.
Fantastic. Can you give me the most the closest popular places surrounding this particular one?
So this one is probably the closest that you're going to be to. No, this is the closest one that you're going to be to for Manchester. To Manchester United, so Old Trafford, it's a 7-minute drive. So you've got the football fans, etc. And if you put this on Airbnb, you've got 2 million visitors coming in for the spa. You've got Trafford Park, which is 4 square miles of business park, which holds 1,400 companies and 44,000 employees.
It's massive.
You have contractors coming in to stay in such a luxury location. I can send more details later, of course, but you know, it's it's the best development to invest in terms of security. They don't need to be. They don't need to make a single sale to complete the build. They are fully funded. You have a strong track record. They've already built about 6.5 billion pounds worth of property in their 15 years so far. So they have a strong track record. Location, it's brilliant. Pricing, you're not going to see anything this low in Manchester ever again.
Wow. This is interesting. Although he's going to be sharing more of such luxury, 5-star hotel standard apartments and investments. Trafford Water, I've had the privilege. He took me on the ride to the Trafford Water. It's a magnificent,
Yeah.
very close, locked down with the seats, and you can't just but imagine having such a thing. If you can take action right now, the viewers and our audience around the world who is listening to this podcast interview with Mr. Andre. Mr. Andre is a NPP a resident consultant with many years who has helped people from Asia, Africa, Europe, Canada, USA, all around the world, from India to China, has helped them to build their real estate portfolio. So I'm going to give Mary to take the next questions. These questions are what our potential buyers have been asking us. So we decided today to put it to our platforms, to stream it so that those who want to invest, those who are skeptical on where to put their money, could be able to have the privilege of hearing from the horse's mouth, which is the expert, Mr. Andrew. So over to you, Mary.
Okay, Mr. Andrew. Regarding investing in a foreign real estate market like in the UK, there are some barriers and myths that has been like holding people back in putting their money in the UK real estate market. And one of the questions that we've gotten from them is that many of the non-UK investors they fear complicated legal or financing process. So, what are the biggest misconceptions that you see, and how can they be overcome?
So a lot of the misconceptions that we see from foreign investors is access to finance. So a lot of foreign investors think that you need to be a cash buyer to invest in the UK market. However, no, I've got clients from all over the world: Asia, Africa, America, South America, who are not residents of the UK, but because lenders here they look at the property, they don't look at the borrower in terms, they don't look as much, but they do. um, they're able to offer mortgages for investors who um, want to get a mortgage. Basically, it might be slightly more. However, we work with lenders from all over the UK. We work with the brokers who have the experience to um, provide mortgage products for clients all over the world.
Okay, so how easy is it for like a non-resident of the UK to finance a UK property purchase today? Like if an investor that is ready to invest in the UK real estate market, how easy is it for them as a non-resident of the UK to finance a UK property purchase?
So, if we're looking at finance, I think it depends on a lot of circumstances. And if, say, you were looking for further information on this, I would very I would probably put you in touch with the brokers who would go through the whole process with them, just to give them some security. Yes, based on what you've told us, based on your circumstances, you'll be able to get a mortgage on their circumstances, because it's a, I would say I can't give a definitive answer in terms of who can get a mortgage or not. It's based on risk of where they're based, from what I've understood. It's based on their circumstances as well. So I think the best way would be to put in touch with them, with our financial partners.
So are you trying to say that international investors are likely not eligible for UK mortgage financing?
So more likely than not, they are eligible. If you're looking to invest in the UK market, you have amounted a capital via either your own business or or through a high paying job, etc. And if you do have a high paying job, you're salaried, you'll be most likely be seen as less risky, and you will have access to finance. Business, it depends on how long the business has been in business for. But I believe that most lenders in the UK, from my clients, etc., they need at least 2 years of accounts.
Okay, so what you're trying to say right now is that aside from their real estate investment portfolio in the UK, there are other factors to be considered for them to be eligible for mortgage financing.
Yes, that for foreign investors, there are one or two more criterias that they look at over, say, a UK investor.
Okay, at what percentage would you call their like if they want to apply for your mortgage financing, like what percentage does their real estate investment, their UK real estate investment portfolio hold, like for them to be eligible for mortgage financing? Like if I, as a non-resident of the UK, want to like apply for mortgage financing, like what if, and I already have some investments in the UK currently, and then although I know that they are going to consider other facts for me to be eligible, but like how credible is my UK investment real estate investment portfolio? Like what percentage does it hold to get the financing?
So it would depend on some countries. Like, so for instance, for my South African client, he can get away with 25% deposit, and then he gets a 75 LTV. Some countries, depending on, probably say, for instance, depending on risk, it could be 35% deposit, and then the lender will lend 65%. And in some extreme cases, it might be half. So you need half. But it really does depend on circumstances, country, etc. But most likely, the worst case you'll probably see is half.
Okay. So, like, how secure is the UK property market for international investors? I know you've addressed that before, but especially given the currency and the currency fluctuation at hand in different countries, regulatory changes, and then political factors as well. And then there might be future development that we do not know of now that might come up later in the future. Like, how secure is the UK property market for international investors? How do those factors affect their investments?
So from my clients over the past few years, foreign investors, they've invested in the UK market because the currency wise, we're probably one of the most stable in the world. There's not as much fluctuation in terms of suddenly it's weakened by 20, 10, 20, 30%. One day, one week, etc. It doesn't really fluctuate as much as you'd think. And when the pound sterling strengthens, you are actually earning a lot more. No, if it weakens, it's going to be cheaper to acquire. If it strengthens, etc. But over the long term, if you're looking for a strong currency to hold, sterling is probably one of the most held currency in the world by most governments around the world. And I think investors follow suit. So, for instance, my US client who's recently bought, they're looking for a stronger currency than the US dollar at the minute. And I believe that security over the long term helps with their portfolio building, helps with their cash flow, and it helps hedge against their own currency.
Okay. So are there like tax obligations for international investors in the UK real estate? Like I mean like stamp duties, annual taxes, capital gain tax. Are there like exemptions or reliefs that non-resident investors can benefit from? Or do this
So, go on.
okay, sorry. So, or do these taxes apply to non-residents as well?
So, if we're looking at, I'm not a tax advisor, but I can speak from experience from my clients. So let's say my UK client bought property, they'll be still be paying stamp duty. If he bought in his personal name, he'd be paying income tax, which is why most investors now buy via limited companies because it's much more tax efficient vehicle for most people. Same with foreign investors. The only difference would be, so for instance, if a foreign investor bought in their personal name, they'll still be liable to pay income tax on the rentals. If they were to um, say for instance, my client they bought via a limited company, um, the cost would be roughly the same, but stamp duty, the government, UK government charges an extra surcharge for foreign investors. So rather than paying, let's say on a £125,000 property, you're paying 5%, you are paying 7% rather than 5%
Okay,
stamp
this
duty.
that okay. So these taxes and stamp duties is it a one-time payment or is it annually?
So stamp duty is a one-time payment. You're paying on completion of the property. You're not paying on exchange of contracts unless the property is already complete. And I believe in terms of income tax, if you're buying a personal name, that is taken off you every month near enough. Um, and it would really depend on what your well what you require. So we do work with a accountant in who's also based in Manchester, who helps set up limited companies for all my clients who are based around the world, and they make it in a tax efficient way that would depend on your client's circumstances. Or client circumstances, they're very different, so they might be set up in slightly different ways. But that advice can be provided free of charge. Of course, the consultants they set out an hour to discuss your circumstances and the best way to set up.
Okay, so what you're trying to tell us now that there are management services available in terms of like finance. I mean, when it comes to paying their tax for the property and so on, are you offering them that service?
Yes, so we work with partners who will be able to provide that service for clients, tax advice, mortgage advice. But in terms of property management, we do that in house as well.
Okay, this is very important because every investor, locally or internationally, wants to be sure the processes and the taxing issues. But I would like you to elaborate more on that tax issue. Are there tax yearly or just stamp duty and that's it? Then of course I overheard you. You said the tax based on the income. So that a lot of our people, of course, our clients who are in the UK, especially in London. So, and majority of the time, they always place requests for the property in London. So, could you could you harmonize and make some?
Yeah,
Yeah.
so I can only speak on what my clients have done. So in terms of the difference, well, why people are now buying in limited companies, because, for instance, let's say Let's say you get £1,000 in rental, you're paying income tax. Let's say you're a basic rate payer, that's got £200 every month going to the government from that £1,000. Whereas in and then you've got mortgage, you've got service charge, you've got property management fees. You're not going to be left with much after from that £1,000 every month. But if you put it in a limited company, you're not paying any that £200 income tax from that £1,000 rental. What you will be paying is corporation tax on the gross profit. So that takes into account your costs involved, your mortgage, your service charge, your management fees. So let's say rather than pay, let's say you'll get left with £500 after all your costs, then you're paying 19% corporation tax on that £500 and not on the 20% income tax on the £1,000. And that would be the main difference between the two structures.
Okay, so it's much safer or investment wise to go through corporations.
Yes, much more tax efficient.
Right. Okay. So the stamp duty is paid when you want to buy.
It's when you complete on the property. So, for instance, let's say normally you're buying One Trafford Edge. It completes in Q2 2027. So let's say it's a £200,000 property. They only require 20% on exchange of contract. So normally you say, Andrew, let's buy this. So you pay me a £2,000 reservation fee for whichever unit in One Trafford Edge. And then you go through the legal process where you go and exchange contracts, and that contract is binding you to that unit, even though it's not complete yet. So that unit is yours and yours only. You get a copy of the contracts, you get a copy of the title plan, etc., the legal documents that you'll need, and then you pay the 20% deposit on exchange of contracts. Then on completion, let's say in Q2 2027, you'll get your solicitor will notify you how much you need to pay on stamp duty. You pay the stamp duty to the solicitor. The solicitor will pay on your behalf so that you meet all deadlines. You're not going to be charged extra because you didn't pay your stamp duty in time, etc. Then that's when stamp duty is paid, and you only pay it once. You're not paying it again.
Okay, interesting. And there's another thing now as we're discussing, because a lot of people who are listening to what we're discussing today, most of them do not have the privilege of this information. So they're in the UK, they have the money in the bank, but they don't know how to invest in the money or out of insecurity. So
yeah,
based on their background, or some are coming from the third world, for example, Nigeria. So some had probably had investments back in their home countries. So is there anything that will make a UK government to take over someone's property or assets? Is there anything by any means?
So, for instance, so I believe that question was just a bit lagged in terms of I think my internet connection might have been bad then. But what was the gist of the question?
Okay, the question is this: most of our clients and people are in the UK. Okay, so they have the funds in the bank. And then some of them are out of insecurity or lack of information that we are sharing today, or you are sharing with us today. So, is there anything, for example, if I can just give you a scenario where, for example, in some countries, government takes back property for whatever reasons. They confiscate properties, and that's it. So, is there anything that will make such a thing to happen in the UK?
So, for instance, no. If it's your property, it's your property, and the government can't just say, "I want your property," and we'll take it back. Unless what they can do is, let's say they have done it to the Russians, is because Russians are sanctioned or they've been found to be laundering money. That's the only time that they can freeze assets.
Okay.
But I don't think anyone here is money laundering or doing things that they shouldn't do.
That's right. Okay. This is a very good one. For us, and to those who are listening, we've been educated right now. So the UK government does not have any policy or do not speculate that they will have it in the future whereby they can just come and confiscate people's property with fiat, without due process. Of course, the properties are acquired in a legitimate way. You do not have anything to be worried about. You have funds and the property is secured. And once the whole documentation process and stages have gone, so you got your investment, then you got your return on investment plus your capital. Because one interesting thing which Mr. Andrew will be talking about is I want you to educate. This is not, but I want you to educate our audience as a capital investment, and then you are a return on investment. Can you just teach those who have money? They have the money there. They don't want to put this money, put it into investments. Can you just highlight some things there? Thank you.
Yeah, so if you have the capital, you're investing, you exchange contracts, and then you complete. So in terms of legal framework, so for instance, on completion, your solicitor will send the title deeds to the land registry. And once it's on the land registry, and even with the contracts, even if it's not on the land registry yet, so you've exchanged contracts, the property is yours, it's secured as yours, and then you can come to pay for the rest of the property either via mortgage, etc. Once that's done, that will get sent to the land registry, which is the title. It will hold the title deed for the property, and that will be marked as yours. So legally, it's going to be yours until near enough for the rest of your life, or until you pass away, and it goes to your children, etc., etc., etc.
Fantastic. The other one is this: if for example, I have 200 and something thousand pounds I locked into any of these properties that is on the list right now.
Yeah.
Whether off plan, and all the that. And then I have that, go through the process, acquire it, I have the documentations and title document. Can I use the same property, maybe under mortgage or whatever, buy another, to use the equity, to use that as an equity to acquire another property?
So now this gets into really deep conversations, but in theory, so let's go with I'm thinking whether to move on to the financials, because then that would help explain it a lot easier. Let me see if I can share that. Let me see if I can share that. So, because it helps me help you, and it helps you visualize
Exactly.
what you need.
Also, the people listening and watching us.
So, for instance, let me just try and find it. Window. Let's work on one traffic image. Let's work on this. That will work. Apologies, just trying to get this shared.
For those who are watching us, please, you can put the question on the chat box so we can as well give it to.
So I've shared this screen. I think this will help understand the ins and outs of investing. So I've done it for, this is one of my clients' units. No, you're looking at how much you need for deposit for a mortgage. You're looking at how much it costs to acquire this property. So even though it's £216,000, the property, you'd only need £79,940 to acquire the property.
Okay.
There's other costs involved. So, for instance, my client wants to do Airbnb. So this is the estimated cost of furnishings to furnish it for Airbnb. This is the stamp duty land tax on the property, estimated on completion. So if, say, you only look to, the developer is only asking for £20,000, well, 20%, which is £43,000 initially. This is what you need to invest in initially. You don't need to invest the total £79,000 all at once. You can use £43,200 to invest in a property now, and then the rest is on completion. And it helps with cash flow. And if we're looking at capital appreciation, etc., we're looking at rental returns. So if you rent it out on Airbnb on an average nightly rate of £100 on an 80% occupancy. So at the moment in Manchester, this is what we're seeing. We're actually seeing about 84% occupancy rate, but let's work out on 80 just to be a bit more conservative. That's what you're going to get gross rental wise. And then you've got all the fees involved. And of course, we can discuss this. If you're looking to invest in the UK market, we can discuss this in person or over Teams just to understand a bit more about what this is. You'll be left with £9,400, which on your initial investment cost is an 11.76% yield. I think financials, I think with any investment in the UK, you need to make sure that is in a good location. The developer has a decent record, and the numbers need to make sense on a conservative basis. If it makes sense on a conservative basis, more likely than not, you're going to make more money than what is shown here.
Okay. Well, that's interesting. This really helps people to understand this thing is the oldest codes. Like we send in our message and content, these codes are being used by the wealthy individuals, corporates, building wealth, exponential wealth, generational wealth that most of us do not even know, or we don't want to know, or we're afraid of taking a step. Even those who are locals in the UK, those things are going on every day. Go ahead.
No, so when we're talking about wealth, your total capital appreciation over 5 years of operation, you're looking at £75,600. You've only invested £79,000. So over 5 years, just capital appreciation alone, you're going to get your money back. So you'll be £0 invested after 5 years. And your net rental, let's say you keep it all in, let's put a tax on it. Let's put a corporation tax on it so that you know how much it would be. What's the corporation tax in the UK? Times by 0.81. Yeah, times by. Actually, sorry, G18. So that's what you get after tax, which is still after corporation tax.
Okay.
Wow. Okay.
Over 5 years. So if you put these two together, that's £130,000. £120,000 return. That £120,000, you've only invested 70. Let's call it £80,000. So you've got your money back. You've taken your money out by either refinancing or selling. I suggest refinancing, because when you refinance, they'll revalue the property. Let's say the property is now £300,000. They'll work it out based on the income, how much you can take out. They'll base it on how much you've put in already, and most likely than not, you'll be able to take out at least £60,000, which means that you're only £20,000 invested on top of your £44,000. So you've got £100,000 in your pocket after 5 years of operation.
Fantastic. This is
And
very
then
important.
you've still got
Right.
capital coming in. You've still got money coming in every month. On top of that, so you could continue to grow wealth, and when you do take the money out, your yield is going to go up a lot more because you're less invested, and
Um,
yeah, this is
Go
where
ahead.
you're going to be building wealth.
Yes. What you're revealing today, most of our people or people from different parts of the world, they pay thousands of pounds to go for this information because it's an exclusive information. But we're giving to you free of charge because we are passionate about you moving from your poverty mentality of holding cash in the bank. The banks are loaning the money every day. So you leave the money there and someone is using that capital, making money, growing rich, and you just have figure that's the balance sheet, and then the bank is making interest, and then of course the person who is investors will take the risk and making huge returns. The hundred and something £1,000, your capital investment is still there, plus your monthly cash flow. This is insane. For anybody listening and don't want to take an action, MPP residential is trusted, transparent. You can see everything is displayed on the screen. So no hidden information. Streaming from TD Studio. We're giving this and we're going to be having this on monthly basis as God permits us. And then based on our schedule. So Mr. Andrew is giving this information free. We are giving streaming to you for free. So please take advantage of this and grow your wealth, your real estate portfolio, so that we all prosper together. So that has sailed. Let me transfer to Mr. Michael. Mr. Michael will be talking about asking you about inheritance and transfer of ownership. Mr. Michael, for those who are building wealth, because every wealth has to be transferred somehow. Okay? So that's what is called generational wealth. So over to you, Mr. Michael.
Okay. Before I go to that, I have one question that regards the risk factor of currency fluctuation. How does it have effect on African investors?
So I've done quite a few from all over Africa. I've done one from Somalia. I've done a couple from Nigeria. I've done from South Africa. And one of the things that is a common theme is the currency fluctuates quite a lot on a daily basis. And I fully understand that, for instance, no, it's going to be what, £43,000 to £43,200 for your deposit, and that could fluctuate from on the daily basis. It could be, if you keep translating, it could be like 10% more expensive. It could be 10% more expensive, like cheaper in your own currencies. And I think the way that I'd actually work with African clients is that we look under budget. We look at the budget that is slightly smaller, so it can account for, let's say, rather than looking at £43,000 initial investment, let's look for something that's 38. And that will account for, oh, I can't afford it now because the currency's weakened by 10% against the pound, or I can't do this right now because the currency makes it takes out budget for me. And so we look at undervalue. So let's say, Andrew, I can invest this much. However, I was like, actually, you're from this location, you're using this currency. I've had experience working with this currency before. Let's do it where let's go on the budget, because I think on the budget's the best way to go about it.
Yeah. Okay.
All right. So, inheritance and transfer of ownership. So, in the event of death or incapacitation, can the property be inherited by an investor like a next of kin? And if yes, what is the legal process and documentation required for this transfer?
So, right now, under current legislations, the easiest way is limited companies, where you're only transferring a share ownership to your next of kin. So the property isn't transferred over; you're just transferring over the share of the company. And I think it is sound financial planning to either have them as a shareholder already, and then succession planning, etc. Ian Presbury at Providence Financial, that he will give you the best advice on how to set up for this. But limited companies is the better way to go to avoid large stamp duty bills. And if you're looking at buying personally, you understand that there's a 40% inheritance tax of anything above a certain amount, and you don't want to be paying that to the government, because you'll be forced to sell the property, an asset of wealth building, just to pay a tax bill. And if, say, you need that advice, we put everyone, foreign investor, we put everyone through to Ian Presbury at Providence Financial, who has helped many of my clients set up in the worst case scenario. And a lot of the time, and it's unfortunate, but we don't know when we're incapacitated. And I have a client who was, but it was very simple for him to just transfer the share over to his son, and his son doesn't have to deal with the inheritance of that at this moment in time. So that's one way. So that's one way where inheritance planning, succession planning, etc. That needs to be done from day one. What's your succession planning? What do you need for succession planning? How can we structure it in a limited company or in whatever structure would work for your circumstances? That's a conversation for Ian Presbury.
Okay, fantastic. Okay, I think that's very clear right now. From the beginning, those who are listening, so they have to put that into consideration, the succession plan should in the future, because we don't own the future. Okay, so let's quickly, we're running out of time. Property management and rental income. So how can non-residents investors manage a property from abroad? Are there property management services available? And how rental income typically handled by your company and tax?
No, definitely. So, MPP Residential, we have an in-house letting and property management team, and we have just won the 2025 International Property Award for all our clients. So this is international, because we manage so many foreign investors. We were eligible to apply for the award for International Property Manager Award. So we've just won that, and I was only just notified this morning. The property management team, they will look after your property for you. They'll deal with the tenants, and they will collect rent for all our foreign investors.
Fantastic. This is good. They have the cash flow coming every month. And
Yes.
your award, congratulations for your award.
Thank you.
We're proud of you, and we're happy. then we'll be growing together, and then with your help and information available, because the more information you give, the more people will understand how to invest. So, of course, because returning plan and exits, how did, for example, like if I put £100,000 and what is impairment? For example, if I put £100,000, something happened, I could not have the money to continue paying, or I decided to exit. Then what are you handling those things?
Okay, so let's say if you bought let's look at either resale or exit strategies. So let's say you've bought a property off plan, it's complete, it's been running for 5, 6, 7 years now, and you're looking to exit. We can either exit, well, we will exit via sell, and we do have a resales division who would put the property on market for you. And the average time is depending on the location of the property, how much you're looking for, how quickly you need to exit. So, for instance, if you give us 6 months, great, we'll try and get it at the market price for you. If you do give us, say, for instance, I need this really quickly, I need it as soon as possible, then we might have to. We would advise you to go under market value to get a sale done very, very quickly. So it really does depend on your planning for exit. You let us know, and we can do that. So, for instance, the other option is, I believe, if you're looking at off plan, you've invested, but your circumstances have changed, and you can't complete. You can't put the stamp duty down. You can't put the extra 5% down if for a deposit, etc. What most developers do have is a re-signability clause, and if that happens, what we can do is we can reassign your contract to another investor. So find another investor to take over your contract, and you'll get your deposit back. And you'll probably, with one developer, there's only one developer that will allow you to sell for a profit, but they are like premium developments. And if we're looking at, if you do reassign, the only costs and risks involved you're looking at is probably legal fees. There'll be legal fees involved, so you might not get all of your money back that you've invested, which is why I do have the conversation is, are you ready? Do you have all the funds in place, etc.? And I do fully understand that things happen, but I'd rather clients complete and enjoy the property, enjoy the rental yield, enjoy that cash flow, and keep it for a very long time, because it will make life-changing money for you.
Absolutely.
But there are safeguards in place if your circumstances change, though.
Fantastic. Thank you, Mr. Andre. So, right now, the action steps. Mary, can you take him on the action step so we could get into the close-up?
Yes. Before I do that, there's a question I actually wanted to ask on legal documentation and proof of ownership. So, what are the key, especially as non-residents, and how will these documents serve as proof of ownership for investments globally?
So I think that you'll talk about due diligence and what clients can do to make sure that it's the right investment. I believe the internet connection is a little bit. Can you hear me okay?
Yes. Very.
So
Okay,
I'll
brilliant.
just repeat my questions.
What was your question again? Now that I can hear you properly now.
Okay, I said my question is, what are the key legal documents that investors receive upon purchasing the UK property, especially as non-residents? And then how do these documents serve as proof of ownership or investments globally?
Yeah. Okay. So on exchange of contracts, so when you exchange contracts with, say, developer, etc., or the seller, When you exchange contracts, you get the contracts with the details of the property, the title deed number, etc., or the copy of the title. And when you go to completion, what you'll get is the title deed after after it's registered at the land registry. So you have the legal contract that will protect you until you receive the title deed, basically, from the land registry, and that's at the moment is taking about 12 months from completion.
Okay.
But it'll be on the land registry, and you'll have the legal contract with the details of the title, with the details of the property, with all of that signed, and you have the copy of that as well. So legally, we have the legal framework that has all the documents you need. So, for instance, for my own personal buy-to-let, I have one that completed in February. I've still not got the title deed for it, but I've got a tenant, I've got income coming in, contracts have exchanged, my mortgage company paid the rest, and I'm getting a very nice income from it. But that ownership-wise, it's the title deed that's coming from the land registry, and on the land registry you'll find all the title deeds for every property in the UK.
So they get it the- the-
Pardon?
I mean, do they get these documents immediately after payment completion?
So they get it about, so for the title deeds, they get it in roughly around 12 months from completion. The title deed will be sent to your solicitor, and the solicitor will forward it on to the buyer. And basically, the solicitors there are there to make sure that everything is legally binding and your ownership is not questioned at any point. Your ownership of the property that you just bought is not questioned at any point. They've put it to the registrar, they've done all the legal contracts, everything is there to make sure that your ownership is not challenged at all.
Okay. So for anyone listening right now, so what's like the first practical step you should take if you're considering investing? And speaking of due diligence and risk mitigation, like what are the due diligence steps an international investor should take before making a purchase to prevent fraud and legal disputes?
I think that so for the due diligence that investors can do is they can look at who the developer is. That's quite easy. They can check on the site history. So, for instance, a lot of sites around, let's say Liverpool. Liverpool has a lot of sites where there's one developer who bought the site, sold it off plan, and then went into administration. And then another company bought that site off that administration and then redid the plans and then resold it off plan, etc. Now, some sites do have a history of not completing.
Okay.
And I think you can find there's a lot of information on that. So, for instance, you can do the due diligence on the company that you're speaking to. So, for instance, if you're speaking to us, you can do the due diligence speaking to us.
All right.
You can go, okay, let's search for Google, like let's search for MPP Residential, or let's search for someone else who I'm talking to, the company behind them, and you'll find a lot more about how they go through with things. So, for instance, we're at MPP. We look at the developer track record, we look at the developer funding, we look at a lot of due diligence in terms of the legal contracts as well. We look through the contracts, we look through who the management company will be for the block, who will maintain the block, who will maintain the apartments, and what their track record is like. And we look at if it's if it will tarnish our name, we don't take it on because we don't want to put investors' money at risk, and we reduce that as much as possible. And a lot of the time, we say no to a lot of developments then more than we say yes. And we're in a very privileged position where every developer, because of our long-standing nature in this industry, every developer wants to work with us and they want us to sell their products. But most of the time we say no because they're either not fully funded or they have a poor track record, or even location-wise, it's not the best location. Investors aren't going to see a lot of money on their return. So I think with investors, the most they can do is probably go do a little digging, basically, on the development, on the area, on the location, and on whoever you're talking to.
Okay, fantastic.
Yes. Your company or you as an expert help new investors navigate this process from start to finish, like from the beginning to the end, them acquiring the property and all that.
Yeah, no, definitely. Um, I there isn't much more that the investors can do apart from do their own research, doing their own search on the developer again. And I think a lot of it is down to who you're talking to. Maybe if you do go direct with some developers, they might not have a good track record. That might not be open knowledge. So a lot of the knowledge that I have on any development in the UK is because I know who they are, I know what they're doing, I know a lot of things, and it's good to just, if you find someone like myself, or be open. What do you think of that development? Saw this. The headline figures are, oh, they look really really good, and sometimes if the headline figures are too good to be true, sometimes they are too good to be true. And I think just common sense also helps.
Okay,
Someone is asking
okay. Well, I've been question from an
from
audience.
an audience.
Okay.
So it's asking how can UK property investment support immigration opportunities and resident opportunities?
Did you hear what he said?
I didn't quite
Can
catch
you-
that.
Okay. Okay, it's asking that how can UK property investment support immigration or residency opportunities?
So there used to be a visa that if you invested or if you bought property for however long, that would help. But nowadays they are not connected. You can't just buy a property and have UK residency, etc. It might help with, oh, you have investment here, or if you're planning to apply for a visa here, it might help with its success rate, but it's not going to give you residency. Those days are long gone now, and you can tell from Russians, etc. Back in the day, they bought UK property for UK residency.
Okay. All right. So, people watching right now. So, these are important information that you're hearing. Undiluted, no makeup, no rush. You hear it from the experts. Whatever that you have more questions and I know you do have more questions. Ms. Andre, for people and all our audience, and then of course those who are on the streaming right now listening to you, can you share some of the properties that you have, whether off-plan, ongoing projects? Most of them have the privilege of visiting them. Share to us and how they can subscribe to it.
So yes, so I've got one which I have a client who bought this. So let me share that screen. Current client. So he bought this quite a few years ago. It's been complete now, but let me just try and share it. Okay. So he has a 1-bedroom apartment in Castlefield, right by Deansgate. He bought it relatively cheap because it was a long time ago now. But I am now
You're
sharing.
sharing something right now?
Yeah.
You're sharing something. Okay, 1 second. So could be put on the screen. Okay, you can go ahead.
So this completed around 3 years ago now for one of our clients. Was his cost, £61,700 to have a 1-bedroom city centre apartment. He bought it off plan for this price. And over that long length of time, similar and this is his return on his current the price that he bought it at. £1,200 rental, which is £14,400 a year. This is the fee that we charge him to manage his property for him. This is the service charge on the building. And then this is his mortgage payment currently. So he's left with £6,039.27p, which is a 9.79% yield. When he first bought it, though, the rental was a lot less. So it was £1,000 on completion. So he bought it off plan and it was £1,000. You can see because he held it for 3 years, his yield's gone up from 6.37% to 9.79%. Because of the rental rises over the past 3 years, and that's not just rental yield. So he now gets £6,000 every year, where he had nearly £4,000 every year. So by holding it long term, he's getting more in his pocket every year. And the same 1-bedroom on the 4th floor. So this is on the 9th floor. 4th floor, to show you how much the property value has gone up, sold for $220,000. And this is the price he bought his 9th floor bedroom at. So over the last few years, his capital appreciation is at least £40,000. And then you've got your rental yield, how much you're getting every year in rent after all costs. You've got a strong you've got a strong cash flow. You've got strong refinance options. He's looking to refinance. He's looking to pull out that £40,000, so that he'll only be £20,000 invested. But imagine if he remortgages, and this is going to show you the power of remortgaging. Let's say he pulls out £40,000, and then he adds £40,000 here to his mortgage. His yield, because he's less invested, he's pulled out £40,000, he's put it on the mortgage, he's added it onto the mortgage, he's getting less per month, but his yield has gone up because his investment cost has gone down. And this is where when you get to zero, you're going to make a lot of yield on investment. And this is where I think you've heard all over the world, Elon Musk doesn't pay himself a salary. What he does do is get a loan from a bank based on his assets.
Absolutely.
And he's using other people's money to pay for his. And it's the exact same. Use this more money. Use the mortgage company to refinance, pull out equity. Okay, I've now only got £21,000 invested, but I'm still getting £4,000 based on my £21,000 net investment after 5 years. And now my yield on that, even though it's £4,000, is nearly 21%.
Mr. Andre, this is the next meeting, podcast,
Yeah,
refinancing, remortgaging,
definitely.
because this is where the secret is hidden, where they will never share it to anybody, not their children, not their uncle. No uncle will share some of this information to you. Some of them will not share it. They have the reasons until you discover it by yourself. The codes we are giving you today is invaluable codes that can liberate you from poverty and make you to become rich. You heard when he said, Elon Musk, zero tax. That's how where it is hidden. So you have to know this step. You have to follow the road, or else you just keep living in the dark, in the midst of abundance. Go ahead.
No, so when you talk about tax, when you remortgage and take out equity, this is not taxable, even though it's profit on the property price going up. If you just sold it, you'll have to pay capital gains tax on this. But because you refinanced it and you're pulling it out, you're not paying capital gains tax on this £40,000.
Exactly. What you said. Okay, go ahead.
And that is how the rich is getting richer and the poor is getting poorer.
I don't know. What he said was, we have one of our business partners in Canada. He was telling me how much they paid to attend this kind of training on real estate investment. So when he told his friends that he paid over 20,000 Canadian dollars to attend the real estate exclusive training, they thought he was mad. How can you spend such amount of money? Today he owns a couple of houses, and he kept building from one. He just started with one. Now we have multiple houses in Canada, rental properties every year, every month, monthly income flow. So he kept building, and some of them has taken interest in that thing called real estate investment. So when we have another session where we're going to talk more on the refinancing and remortgaging. Today, Mr. Andre, how did they reach you? Anybody who wants to
So you can reach me via my contact number or via my email, and I'll just put it in the group now.
Yes.
Stop sharing that. MPP.
Yes.
Residential.co.uk. That is my email where you can reach me. You can schedule in a time where we can go jump on a Teams call, discuss your circumstances. Let me know that you are from this webinar, so I do know where you've come from and I do know what we've discussed. And then we can make it relevant to your circumstances. If you want to reach me on WhatsApp, this is my WhatsApp number as well. Of course, I am more than happy to answer any questions you have regarding UK property and financing and how to make your money work for you and not have you work for money.
Absolutely. I can make the money work for you. This is the code we are cracking every day. How do you make the money to work for you while you're sleeping? Mr. Andre of NPP Residential is there to make it happen. You cannot make it to happen by yourself. Someone has to do that. Mr. Andre is here to guide you to building generational wealth. Mr. Andre is very honest, committed, passionate about building that and helping people around the world. He's very good when it comes to international investment partners and investors because of his expositions and position. portfolios, and we went into different. Mr. Andrew, can you mention some of the projects going on right now?
So,
kind of
the one project I would go for right now is One Trafford Edge. If you have 30, 38, I think is the minimum that you'll need for one bed. And then if you had £55,000 deposit for a two bed, that is the one development I will go for right now because of the amount of investment surrounding it. No, you're in Manchester at the moment. If I'm selling a two bed in Salford Keys or in Manchester, you're looking at about £350,000. A two bed for £271,000 is a steal. Your rental yield in that for that price, you're not going to see it ever again. Once it's sold, it's gone. You're not going to get anything else at this price again on this luxury. No, when I'm talking about luxury, I'm talking about concierge. I'm talking about sauna. I'm talking about two cold plunge pools, a fitness studio, a gym, and a co-working space. And you're being right next to Firm Spa. It's a no-brainer. And I'll just share that. What I'll do is, if you drop me an email ask for One Trafford Edge.
Okay.
What I can do for anyone who's on this podcast at the moment.
Okay.
If you're looking to go through, you're looking for investment, this is the best one. We've sold nearly half of the phase one. Phase one is the cheapest pricing. Phase two will be about 5% more.
Okay.
And anyone on here, we can either work out on 6 months free management for anyone who signs up to reserve, or if you're doing short-term lets, Airbnb, etc., a discounted furniture pack. And if anyone reserves by Friday this week, we will provide £1,000 cash back on One Trafford Edge.
Wow. That's it. Jump into it, guys. Wherever you are, 1,000 cash back. If you just
No one else is getting £1,000 cash back.
Wow.
Only you guys have access to £1,000 cash back on exchange of contracts. So after you exchange contracts, once we get paid, that's when you'll get your cash back.
What is the down payment of this?
So you need £2,000 to reserve.
Okay.
Either one bedroom or two bedroom. It's the same, £2,000 reserve. You'll go through the legal process, and you'll be paying 20% of the property price on exchange of contracts. So that's how much you need to secure. To reserve a unit is £2,000 though.
Right. And it takes, after reservation, how many months?
You're looking at about 18 months now.
Okay. To pay the full 20%.
No, so on it, normally the legal process will take. So let's say, normally you reserve today. You've paid me £2,000. I've got you to fill out a reservation form. I've got all your details. We would instruct solicitors for you, and the solicitors will show you the title plan, all the lease details, everything you need to know about the property, and then you sign the contracts. Once you've signed and exchanged contracts, then they'll request the payment for the rest of the 20%. So the £2,000 reservation fee is actually included in the initial deposit for this development. So it's part of the 20%. Normally, the process will take about a month. So you need to pay in a month. And then on completion in 18 months, that's how long. That's when I need that to get mortgage, or you pay by cash. It depends on how you're looking to reserve.
Fantastic. Mortgage or cash payments. Thank you, Mr. Andre. For us, we are glad. Yeah. And also for those who are watching, £1,000 is waiting for you right now. So we are very happy.
For anyone else, So let me just share this one bedroom.
Okay, please.
Let me just share this one bedroom here. Share screen, window. So this one I have available. If you can share this screen that I've shared. This one,
Yes.
if including parking space, is 216,000. This is a 10th floor, one bedroom unit, which is large, 632 square foot, where you can sleep 4 people on an Airbnb, etc. If anyone would like to, I can probably get a discount on this as well, on this price, to include parking.
What's the name of this one? What's the name of the
One Trafford Edge. It's still One Trafford Edge, but it's a one-bedroom unit, unit 76.
Okay, 76. What floor?
10th floor.
10th floor. Okay, fantastic. All right, for those who are watching right now, so please take action. Action, please. Subscribe. And then, of course, want to thank you, Mr. Andre.
It's my pleasure, Nolly.
Yeah, yes. And to the whole team of MPP Residential. A shout out to you guys. We love you guys. And then, of course, those in the Manchester area, London, Liverpool, Birmingham, guys, take action. Those in Africa, Europe, Canada, Asia, this is the time. Invest now. Don't say tomorrow. For those who have watched us, we thank you for always listening to our podcast. Myself, on behalf of the team, Mary, and then of course Michael, then Vicky, and my humble self, the host today, Mwale Tucci, streaming you from TD Studio Hub. Want to thank you for always supporting us. Please, my humble self, the host today, Mwale Tucci, streaming you from TD Studio Hub. Want to thank you for always supporting us. Please, the only thing we ask you to keep receiving the notifications